Lele, and let's start with the volume growth, which was registered almost 7% in the quarter gone by. Just want to understand how much growth are you, guiding for H2 FY26 now?
Good morning, Namaskar. Thank you for having me on the show, and thanks for the kind words. I'm genuinely delighted that despite September quarter being completely washed away with monsoons which were intensive, our team managed to deliver a good 7% volume growth. That also augurs well because with YTD numbers at 8% volume, I think we have shown quarter after quarter that Castrol's team has the ability to deliver ahead of the market growth performance consistently and continuously. With that, I think the top lines have also come at about 6% and PAT at 10. These are good set of results, and if you just extrapolate that number for the last quarter, I'm hoping to keep the volume in the same range and the profitability guidance within the framework of 21 to 23 that we have spoken about in the past. So that's where we are.
All right. But along with that, also give us some sense that which segments will help you perform better and which will actually drive growth. Will it be the rural side, the industrial segment? What's the outlook on both of these?
Thanks for that. Last quarter, I had spoken about the fact that Castrol does not usually get associated with industrial range of lubricants. And that has been a focus area for us. Quarter on quarter, we are delivering double-digit growth in industrial. And that really means that a bunch of my team members are now walking into industries, whether it is cement, steel, electronics, or glassware, and making our presence felt. That's one. Rural. Most of the consumer companies now look at rural and urban and say, rural has been driving growth. For automotive sector, in lubricants to be precise, now more than 50% of two-wheelers, ICE two-wheelers are being sold in rural area. And fortunately, we are really the distribution masters when it comes to lubricant spaces. We now retail in about 40,000 plus retail stores in rural, with 500 of them being Castrol quick lube change stations, because we realize that rural areas, the dust and grime of rural causes engines to seize, performance goes down, and these locations are equipped with technology to really suck out all the dirties of the engine and then put the Castrol Active into the bikes and scooters. So that's really working well. So we do believe that two engines of our growth will continue to be rural as well as industrial, while we keep doing well on our core. I should also talk about innovation, which I'm very, very excited about, because I said, apart from the times when you go for your oil change, you think about us. I also want to make sure that there are a range of other products that bring the same promise of Castrol to you. And in that, we have launched helmet cleaners. 240 million bikers in India always are concerned about the grime and sweat of their helmets, which make it difficult to wear a helmet, which is absolutely needed for their safety. With Castrol helmet cleaner, I think we are able to offer them a better, safe and healthier ride. So that's really been introduced in the market as a new product. Now we have almost more than a dozen AutoCare products available in the market, and that's the expansion in consumer relevant adjacent categories. So you will see some excitement coming in there as well.
Definitely, we can already sense the all-round coverage in all the key areas. But then having said that, let's also focus slightly on your margins. Earlier, you had, at the end of the last quarter, guided of margins to be in the range of 21 to 24%. Margins have expanded beyond 23.5% in Q3 current year 2025 at the higher end of your guidance. Now, the road ahead, what is sustainable out here? What's the kind of range that we are looking at?
Thanks for that question, Kavita. And again, I would have liked that margin to not come so high at the end, at the higher end of that guidance. Because if you think about it, September quarter was a tough quarter from cost perspective. The dollar INR forex rates have gone beyond wacky averages that we can manage, right? We are talking about 89, 90 rupees a dollar. And crude has also remained, while range bound, it's volatile. All of our material, we are a hydrocarbon derivative product company, and all of it gets imported, and hence a sharp eye needs to be kept on our COGS while our consumers continue to buy rupee terms, right? So I can't pass on any of these shocks to consumers on a quarterly or a monthly basis. So typically, the way to plan this is get the whole portfolio to fire. Volume on one end, which comes from commercial vehicles, profitability, which comes from two-wheelers, and of course with four-wheelers, car range, and then expand consistently into products like rural, channels like rural and products like AutoCare, while industrial also brings in sustainable growth area of focus. Now, with all of these, I would really like to remain towards the center point of that guidance range and not at the higher end. Typically Q4, because we operate Jan December, and every time in Q4 you see some very good results from our side, because these are global supplier discounts that we get, and they get accounted for in Q4. So we do have some of those coming in, while we have some headwinds on our top line. So I would advise, usually I bar from talking about the future, but now that the 9 months of the year are over, I would extrapolate the line to say, keep this consistently going. And that's what my expectation from my team is. And that's what I would like to deliver for Q4 as well.
All right, Kedar, we'll watch out for that. But let's also talk about the crude oil prices as well, because you did tell us that which are some of the factors that are hitting your margins. But along with that, in terms of the crude prices, they are seem to be falling, trading in a sort of a range from $60 to $65 per barrel mark. Will this aid margin going ahead?
Great question. If full year we can stay at in the first half of 60 to 65, that benefits the business, because base oil is a derivative of crude, not completely connected. It's only 50%, connect. So to say, if you were to look at a crude oil price to base oil price explainability, it's half right? I must only tell you that. But over a period of time, it should be benign environment if crude oil remains in 60 to 65. Now, having said that, this year, average forex would have been 86, 87. Next year, if it goes to 90, 91, then all of that benefit is being eaten away by forex headwinds. We don't want that to happen. Ideally speaking, forex should remain at 88, 89, and then the benefit of crude oil in terms of base oil pricing could be realized. Now, if that happens, we will actually accelerate growth in segments which are not as profitable, because there's a good balance of volume and profitability. And we do want to get into volume growth sectors so that consistent volume growth drives scale benefit as well as consumer franchise goes up. And you remember we spoke about Essential some time back, which is our offering for cost-conscious consumers, promise of Castrol at a more affordable rate. And when the benign cost environment exists, I am able to do that a lot more at scale. So we would want to make ourselves more relevant for larger masses of consumers and expand the franchise if we do get benefited by the benign cost environment.
Right. Kedar, one last question before we let you go. Your national network grew to almost 150,000 outlets across India. Network expansion targets, if you can share with us for H2 and FY27.
Yes. Network expansion is a classic way for an organization to bring indirect coverage into direct coverage. So when you make something, an outlet which is covered through a wholesale trade, and it comes into direct, my sense is we are able to grow at about 2x the rate versus going there through an indirect coverage. Now, it doesn't mean that yesterday the product wasn't available there. Product might have been available through indirect. Now it's available through direct. And the maximum difference comes in rural areas. So as I said, rural areas, now we are available in 40,000 plus outlets, and close to 500 plus of them are those Castrol quick lube change centers. So my sense usually is a company of our stature and scale should be really delighted if we are able to add 3 to 5% coverage directly net into our expansion plan every year. So if we are going to 150,000 today, we should close next year with about 5 to 7,000 outlets coming into our network, because that's a good rate to keep ourselves in a leading position and being available where consumers are asking for Castrol or any lubricant for that matter.
Kedar, with this, we let you go on that. Thank you so much for giving interesting takes on what's the outlook going ahead when it comes to Castrol India.